Good morning, ladies and gentlemen. No rest for the wicked. We're ploughing on with our next quickfire session with our two superpowered guests. For those who don't know me from last year, I'm McElvoy. I am senior editor at The Economist, and I run Economist Radio. And I'm very pleased to be back here in Ukraine, which I covered many years ago. I tend not to say how many years ago, or otherwise I have to say I was very young at the time. The only 12-year-old foreign correspondent in the 90s. You heard those brilliant and I think revealing introductions there to how Narayana and Keyu see the current state of affairs. We're sort of lucky to have such a huge global economic story and finance story to dig into. Can I just ask you to slightly either whisper to your neighbor or just like hold that conversation to coffee? Because I would really like to get our two guests now to engage with each other a bit and work out where the commonalities and the differences in their positions might lie. So, Narayana, to you first, sorry. Keyu said, well, this could actually turn out to be this burgeoning trade war and flinging around of billions of dollars of tariffs. This could turn out to be sort of for the good in the long term. Is she being unduly optimistic?
Thanks, Ann. And I thought I learned a tremendous amount from Keyu's talk. So I can't speak to the Chinese aspect of things at all beyond because all I know is what Keyu told me. But on the American side, I think that as China continues to grow, I think that the U.S. had seen itself as being the unique superpower, and China is going to be, at least from an economic standpoint, is going to be of equivalent size at some point, and that will be seen as a source of tension. I think that the big question for Americans, for Chinese, and for the world is, to what extent is President Trump's vision one that's going to persist beyond his presidency, however long it lasts? If you look at the people who voted for Trump, they tended to be older. The younger people were voting for his opponent, who I suspect we would not be having a conversation about a trade war with China had she won. And so, whether or not the Trumpian perspectives are ones that go beyond 2020 or 2024, I think it's very difficult to know. And from that point of view, whether there'll continue to be tensions between the U.S. and China about various issues like intellectual property, I suspect that's true. Whether that conflict will manifest itself as a trade war, I'm much less confident about.
We talked about retaliatory measures. I'm just going to come to you in a minute on that, Keyu. But one of the things that interests me was reading this morning that China's approach is really to try, in effect, political targeting. And Keyu also mentioned that. Not a broad spectrum response, but something targeted, particularly on the agricultural sector and on Trump supporting farmers. Do you think that's effective? And do you believe that China can call the political effects of that correctly? It's not a play that we've seen from Beijing before in terms of getting the politics right.
I'm an economist, so my area of expertise is not politics. But with that caveat, I would say I would be careful about that strategy. I think it's one that President Trump could end up using against China in the sense of saying, look, I told you that this was a country that we have to be nervous about and scared of, and now here's the evidence to support that.
What do you think about that, Keyu? You said you spoke very eloquently about the way that the Chinese government is thinking about these measures, but how accurately can it calculate the effect?
I think here perception really matters. Perception does become reality because the perception is that while in the past the contained China theory only resonated with very few hawkish conservative contingent part of the party, now everybody believes it. Everyone in China believes it. And their perception is beyond Trump. They think that it actually could even get worse when the Democrats come on.
How so?
Well, they always thought that the Chinese communists have always thought that Republicans were a little bit more friendly with China, and the Democrats, thinking about China's kind of the pressure on its workers and also the challenge and all of that. That this is an ongoing thing, and that it's really about the rivalry and the principal position. That's number one. So it's the perception. And I think that the real danger, I mentioned some of the positive reactions for China, but the real danger is that this is inflaming a great deal of nationalism in China. And we have this to me, very scary new left part of the party, which is anti-capitalist, anti-liberal, anti-West. They used to be a small minority, and now they're saying, well, here's the proof. Here is actually, you guys all open up to the West and thinking like the West. Here is the problem. And more importantly, I always thought that what would power China's natural transition into a more open and more liberal society is not through joining the WTO per se, but it's with the new generation. The post-80s, post-90s, my generation, we've all had some Western exposure to Western thought, Western education. Looking at survey data, they are much more friendly with the West and also Japan and Korea than previous generations by a long margin. But this is actually inciting nationalism even in this younger generation, and that's the real danger.
Do you see any way for the administration to refine this position as we go along on tariffs, Narayana? What do you think will happen? I mean, this feels like the big shock and awe at the moment, doesn't it? The 200 billion and the threat that will be even raised in January if the Chinese government doesn't give concessions. I mean, I'm asking you really to put yourself in the mind of Donald Trump, which to some people doesn't come easily. But nonetheless, it's important to see it that way, as well as simply to be critical as an economist.
Yeah, I mean, one of the challenges about doing economics in the current time is how intertwined it is with the politics. And, I mean, it always is, but it seems more so now. And intertwined with, in particular, with the political vision of President Donald Trump. I personally saw the latest tariffs as really linked to taking a stand for Trump's base as we come into the midterm elections. We're going to have elections in 6 or 7 weeks in the United States for large parts of the Congress, and I think he saw this as being a way to say to his base, look, I'm doing what I committed to doing when you elected me. I think it is, Keyu mentioned this in her talk, the China shock is over, but there's many people who are disappointed with their economic outcomes in the U.S., and they want someone to be held accountable for that disappointment. And I think Trump is selling China as one of the many fall guys in that story of who should be held accountable.
Keyu, does that resonate with you?
Yes, certainly. This is the political motives behind this is very real. Again, the perception in China is still that it's much longer and it's much more about other things. And I want to mention that, and here we can also have a debate about this. The basis of the decisions on tariffs was based on something called a 301 report done by the U.S. Trade Representative. But we looked into this very carefully. And there's a lot of misunderstandings, a lot of errors, a lot of mistakes about, to give you one example, one of the big complaints is about forcing technology transfer from companies, U.S. companies in China. It turned out 17 companies felt any kind of pressure out of sample size of which is not even reported, that China had about 40-something cases of complaints in the WTO, while the U.S. had 80. So, et cetera, they're listing out a lot of the misunderstandings about trade and unfair practices.
Are you really saying that China's record in the WTO is as solid as that makes it sound? Because when we talk about the rules-based order, a fair criticism, I would say, of China, long before this, this all kicked off, was that it, and I think the Economist has said this repeatedly, is that it respects the letter of the rules, not the spirit. Fair criticism.
So on intellectual property, I think even the Chinese government recognizes that that's one big problem. On a lot of the other things, it simply says, look, let's look at the numbers. Over the period since China joined the WTO, the U.S. complaints against the U.S. trade incursions was double the amount of the total number against China. That's just basically on the database. And they have other reasons to say that apart from intellectual property, it's overpromised on opening up many sectors except for financial industry. And that's what they're working on now.
Do you accept that, Narayana? Do you accept that account of the relative sins of China and the U.S., or is that skewed a little bit?
Yeah, I don't know. It's not something I know very much about, but I will say that my own assessment of the calculus of the administration. This kind of evidence is not playing a major role in the way they're thinking about the problem. I think, as I alluded to earlier, I think they feel that things in the U.S. have not gone as well economically for the members of their base as those people wanted it to, and I think that's due to the growth gap that I illustrated in my slides earlier. But there's a perception that someone has to be held accountable for that. I can tell you, if you go around as an academic talking to people, the ordinary people, so to speak, about the economy, academics are held accountable by them for much that happened because we said free trade will be great, and a lot of Americans feel it has not worked out for them. And then China is, regardless of the calculus on that Keyu mentioned, that's not what it's about. It's about a political calculus that Trump's base feels that they've been held. They're feeling disappointment and unease, and China's being held responsible.
But I think we know that, right? I mean, as you say, you've been out and about and spoken to people who sort of also turn a bit on the journalistic class, or on the perceived elites, or on academia, as well as on the politics. So what might be the way forward from this? I won't say out of this, because I think obviously it's got a long way to run, but can you draw a path forward? I know you, for instance, talked about the Fed's response and basically how it fits in with a broader economic outlook. And if you're sitting in the room here looking perhaps as an investor or as an analyst, what would you say, look, a few years out, what would you think we'll see out of this?
So I think the immediate pressures of the midterm elections will be lifted in 6 to 7 weeks. And what that will mean is, for the president, is unclear to me, of course, but I suspect that he will be looking for some way to declare victory and go home on this. But and what that will be, I have no way to know.
Declare victory and go home. Probably Beijing takes the same view. If both could declare victory and go home, the situation might be a little calmer.
Well, I think that's what happened with Mexico, is that both sides declared victory.
Right. So I was wanted to ask Keyu, what would an outcome look like from this that's realistic, but which would, if everyone's looking further out and thinking, well, if this doesn't go on if it goes on forever, basically, nobody will have any trade left. So that doesn't seem like, if we look at Occam's razor, that's probably not going to happen. So what's the way forward?
It's really talking and really negotiating. So the feedback I heard was that during these few rounds of trade talk, the U.S. side just simply wouldn't negotiate at all. I mean, this was the package that they want, and China, that was just completely something that China could not deliver. So really sitting at the negotiating table and talking. And as I was mentioning, there's some short-term retaliatory responses. This is also due to political pressure for Chinese government, but a lot of things are actually happening already. For instance, the financial service liberalization, and also kind of still welcoming American So while we're talking about investment in China, whether trade war will affect that, I think the answer is no, because if anything, China will be more open to welcoming foreign participants.
And when you gave a very interesting assessment of where you thought the Belt and Road Initiative now was, and you said that Ukraine was crucial as a part of that, both by virtue of its geography, but it's also its potential as an economic partner. How does this play into that? I mean, what is the broader effect on this part of the world of everything that you two have been discussing up there this morning?
I think that China's response is opening up not only its own economy to the rest of the world, but also increasing its opening up strategies abroad, which would mean expanding these kind of foreign investment initiatives. However, I do believe that the greater tension will make that more difficult, especially the outward expansion motives. Not more, make it easier for domestic reforms to happen, but outward expansions in terms of investment will be more difficult. And I have to say that, cooperation with this country, which China does place a great deal of emphasis, will be subject to these kind of political tensions, with some other countries, as we all know.
But why would, could you just be a little more precise about that? If I were involved in a huge trade war with America, a kind of superpower trade war, well, one thing one might do is double down on relationships with sort of intermediate and emerging economies. So why would it not play to the advantage of a country like Ukraine?
The Chinese government does think about forging stronger ties with the emerging world. That is for sure has been the goal. However, as I was also mentioned with the case with Sri Lanka, for a lot of these smaller countries, the American card, the China card, is always in the political background, including India.
Do you agree with that?
Yeah, as I was listening to the question, I think taking from the American perspective, there's just an enormous divide in the American electorate on to what extent should America be engaged with the world. And I think when you look, in the U.S., we divide our electoral map into blue and red, and it's the opposite of what you would think. The red are the conservatives, and the blue are the liberal Democrats. But that map really defines a lot about openness to the world as well. And so if you look at the people who live along the coast, who live in the states that are close to, in counties with universities, they're going to be in favor of openness to many parts of the world, emerging markets, more openness with China. And then the people who are living in the more rural locations, the red parts of the electoral map are not. And that divide, how that divide gets resolved in elections will be influencing, I think, American policies going forward.
And what do you think then about domestic policy beyond the trade war? It's funny, we've almost forgotten that there is a kind of economics and kind of finance to analyze beyond this. It's a bit like just watching the big show reel going on while in the background, there are other things going on. I know, and you have written that the best way to prepare for a downturn is to keep the economy very strong. And I think, it'd be fair to say that historically you've always argued on the low interest rate side. That's what you've got on your T-shirt. What do you think is now happening on that score? And do you think the Fed is calling this correctly? Because that also will have an impact on how this all works out.
Yeah, from the U.S. macroeconomic perspective, at least so far, the trade war is very second order. And so the first order issues are the fiscal stimulus and how that's colliding or not colliding with the continuing tightening in the labor market. My own view, as you said, if anything, I wear a T-shirt or a hat that says low interest rates, and I personally think the Fed is tightening a little quickly. I'd be inclined to, going to the meeting next week, I'd be happy to keep interest rates where they are, and just to see whether or not maybe the reductions in taxes and maybe the cut back in regulation is going to spur investment. It's going to spur further growth without inflation. We should give that a chance to play out. And
do you think the American economy as a whole is in a bubble at the moment? I've heard a very interesting conversation last night. Some investors around here sort of saying for sure this is a bubble, sort of get out as early as you can and don't have any kids yourself, sort of thing. Is that, are you more optimistic about the U.S. economy?
In my prior job as president of the Federal Reserve Bank of Minneapolis, I got to hear this bubble talk for a long time, going back to 2010, 2011. So, which doesn't mean it's wrong this time. It's a risk, it's a risk that there could be a correction in stock prices. Coastal housing prices are very high, so in some housing markets of the U.S. So you could see reversals there, and that would be a negative shock to the economy. But I don't think there's anything you could do with interest rates to what you should be doing with interest rates right now is keeping them low in order to keep the economy as healthy as possible in case that shock took place. Raising interest rates now, it's far too blunt a tool to try to manage those risks.
Okay, well, if we were to look to Beijing and to China's economic outlook, apart from the great big elephant in the room that we've discussed at length in terms of tariffs and trade, what do you think is on the mind of the government, on the to-do list or worry list?
I think there is much to worry about for the Chinese economy. The main reason coming from that the Chinese government is now placing much more emphasis on financial stability, and a lot of actions behind deleveraging is already taking place, and a lot of companies are suffering, good and bad, because China's financial system, the lending is still state bank denominated, so dominated by state banks, and these state banks have the mandate to reduce and cut lending, and liquidity is tight. So you do see that economy suffering because of that. And trade war, at least for China, if it's not having a direct major impact, is still one of these pressure points and these risk factors that the Chinese government is taking into account when they think about, okay, how do we adjust policy to make sure the economy is still going to be on track? So I guess what I mean to say is that even though I am worried about the state of the Chinese economy and about opportunities for private businesses, which are suffering on quite a big scale at the moment, I am more or less reassured by the government that they still have lots of instruments and policies and tools to adjust should the economy really go into some more critical condition.
It's interesting, isn't it, the very title of this debate, the sort of superpower standoff in economics, has become the prism through which we look at all of this. Are we right to do so? Or is the world more than kind of, a two-polar world, which we could sort of say was taken over as a metaphor from the Cold War? Do we think that's a healthy one in economics, Narayana?
I think it's inevitable. We've gone from having one elephant in the room from a global perspective to having two, it's inevitable that if you're in Ukraine, you're going to be sitting and watching those elephants pretty carefully. But I think when you're in a small open economy, as Ukraine is, you have to be watching those elephants. But it's more, as I said in my talk, I think everything really in policy making is about risk management. And if you're in Ukraine, certainly China and the U.S. are big sources of risk, and you have to be managing policy and managing your businesses with an eye to the risks that those players can create.
I would be very interested to see whether really both politically and economically the world will eventually be divided in two. Whereas, Anne, you mentioned China's trying to garner much more support from the developing world, linking these emerging markets. This is part of what this is about. And also economically, where I think one of the risk factors when we think about policy normalization, we think about U.S. monetary policy, is the spillover effects onto the rest of the world, and in particular on emerging markets. And we've seen this over and over again, even with a taper tantrum, with interest rate surprise raises, there was, a series of panics in emerging markets. And that is also something that we should be aware of. The other side, which I'm personally working on, is what kind of economic spillovers does China have? And that would only increase over time and in more numerous ways. But we don't still have a very good understanding of it. But politically, as I was mentioning, the developing world, linking with the developing world against the advanced world is still very challenging, because in each developing world, especially in Asian economies, in Asian countries, the U.S. is still behind many of them in terms of political support. So,
interesting. I'm going to finish just before you head to your coffee break, ladies and gentlemen, with the oops, we lost the microphone. With a $200 billion question to our two wise panelists. One thing to do and one thing not to do in the current crisis. Who'd like to go first?
I think Keyu would like to go first.
We can see how you got to where you got to. Right, here we go. Hey, sorry, we are restored to full. So the $200 billion question, thing not to do And yeah, very, very kindly, Narayana, you nominated Keyu to go first. An evil man. Right, off you go.
One thing to do is to start really talking like adults between the two countries, because trade war will, incite many other problems like currency wars and other problems. Why don't you take the one thing not to do first?
Sure.
Don't worry, we'll be done by 6 o'clock tonight, ladies.
No, I think that it would be great if the president and the administration were to try to lay off the political symbolism that they're so fascinated by and really focus on what's truly, I think, in the economic interest of Americans as a whole. That would be one thing to do. One thing not to do. I guess I'll harken back to what I said earlier, which is simply that I really think the Fed should be very cautious about raising rates. People don't really pay attention to monetary policy until it's times of crisis, but we should be preparing for crisis now, and the right way to do that is to keep rates as low as
that's your not to do. Okay, you get the last word on the not to do.
On the Chinese economy, one thing not to do is to start intervening in foreign exchange markets and then creating more expectations about exchange rates, which would only accelerate the RMB's decline.
Great, thank you very much. Clear advice to policymakers there in Beijing and Washington. We're on time, on budget and on time, only at this conference, ladies and gentlemen. Half an hour off for coffee.